Well, everyone's talking about this. Nvidia, 26% up after hours and a squeeze of epic proportions. Hello, ladies and gentlemen, and welcome back to the channel where we talk about stocks, commodities, and cryptos. Today, we talk about the Fed meeting minutes. We also talk about the debt ceiling and the AAA rating. Will the US lose it? Again, similar to 2011. And of course, what goes on in squeeze events such as what we've just seen. This is a monumental period of time with a huge move. And as we know, big things are likely to happen. The next 1 to 2 weeks is likely to be wild. We'll look at some case scenarios for similar times this has happened and what we expect to occur next. Let's get into it. Well, welcome back, everybody, to the Daily Show where we talk about markets around the world. We'll be bringing you the latest news, the macro data, the key levels, and of course, everything else that's hot to do with stocks, commodities, and cryptos. If it's your first time here, welcome to the community. Subscribe and smash that like button. Let's begin with the big news stories. Nvidia, $1 trillion. Yes, it went up $250 billion after the earnings call. And on the surface of it, you'd look at the earnings and say, what's so good about that? The future is here, according to Nvidia, and AI is big. I think at last count, it was over 100 times they mentioned it. It's really bringing it through. We'll look at the charts and see some similar periods of time because everyone's going to be talking about this. And there was one large trader that we'll look at in the options market that would be absolutely on cloud nine right now. We'll have a look at that because watching these big options going through right now is, of course, paramount along with technical analysis. We will be bringing those up. Let's talk about Dow futures. They're dipping in comparison to Nvidia flying into the sun as we're starting to see the 2011 discussions coming back in. The AAA rating of the US, is it in focus? Absolutely it is. And here's a great chart shared on Twitter by M. McDonough. And basically it shows here all of the different CDs around the world, the 5-year CDs, credit default swaps, if you're not familiar with what that is. And you can see the United States in a very strange area. This is not where usually you would expect the strongest economy in the world to be. And it's kind of leaning into this idea that maybe the US may lose their, temporarily, I would say, AAA rating. Similar times, similar things as 2011. Would I be scared? Probably not. I would look at it as an opportunity. However, it's the beginning of this discussion. And we have been talking about credit default swaps for a little bit. And of course, the market's seeing something that maybe we're not seeing on the surface just yet. Fed officials are less confident according to the meeting minutes. What's going on here? Maybe not less, maybe not more rate hikes, but generally they're looking at keeping them pretty stock. I noticed over on Twitter that there were a few bits of news coming out from FOMC members. And basically, as soon as we got the Nvidia news, they came out with some instant FUD to say, hey guys, we're not changing rates till 2024, okay? We're not cutting rates until 2024, regardless of hiking more or not. They're saying they're standing still. We'll have to find out whether that's true. And look, the expectation of a rate hike is definitely getting less and less by the day. And of course, we'll see that when we look at some of the areas later on. The dot plot's not out for a little while, so I apologize about that. But basically, they're reaffirming everything that we thought in those meeting minutes. They're going to stick to the plan. They're going to stick to keeping these rates high for longer. And basically, they want to see those inflation figures go down to 2%. So we've discussed this idea of pre-election years and aggregate cycles. Effectively, these are periods of time where generally markets only have a couple of bigger drawdowns, and one of those tends to happen in July into August and September. That Q3 entry tends to be a bit weaker in these years, and June and July are questionable. That's where we start to see a very interesting point. Now, where are we at the moment? We're kind of like here. So we're following a fairly similar track. If you believe this was true, and I will talk about the fact that I think there's a few other switches, this would be, a period of time where we could see a continuation of the upside. I'm not so sure, and we'll talk about that soon. Let's discuss here with the ES markets. Did we see any inefficiencies or effectively any real discrepancies that need repair in the markets? We talked about the thin volume here. We do have thin volume through this sell-off that occurred. And we know that the market has basically repaired back up to where it had that gap fill. So we had a gap on the day. It ended up recovering in the futures, and we're back up to this level. We'll look at the S&P 500 versus the ES later on today's video. Interesting thing about these volume profiles, this is still a very big opportunity. Markets come back up into the 4180, 4190. I would expect in this zone, maybe bears are sitting. At the moment, we'll look at the closes though, because what NVIDIA does may be incredibly important to this market. Skew jumped up, not really the best sign if you're a bear in the markets. We want skew compression, not skew increase. And that is what happened over the last 24 hours. So skew looking a little bit worse. And of course, we had that gap down. So now we have two gaps. We have one in here and we have one here that we haven't filled. And of course, today we might actually move forward to filling this one. And then potentially we'll have to find out which way the market wants to move next. Central bankers, the Fed, they're still kind of injecting at the same time as they're slowly tapering off. And central bankers around the world, they're continuing to decline. We still have a deep red read, and that is both through the S&P 500 from central bank liquidity and the Qs. So we're still looking at decent discrepancies with obviously a huge run on NVIDIA pushing the Qs up after hours. Let's move over to copper. Demand looks still pretty poor. We ended up closing right on this 358. So another target level hit for shorters on copper. And if it keeps going underneath this level, well, then we're talking about a significant ability to see shorts. Basically all the way back down to these 3.375s for copper. The doctor is looking weak. Remember, this shows us the expectation in the future of growth. And that's starting to look a lot sicker according to the metals market. If we move over to corporate bonds with inflation adjustment, you may notice here that we're still pretty weak. We're making a series of lower highs while the stock market is making kind of like higher highs and hovering around. If this continues to get worse, it will be another warning sign in the markets. What about the US 100? What did it do? Well, it was up, then it was down, then it was down some more, and then of course it flew after hours thanks to NVIDIA. So here's where we ended up going back to. Basically the previous weekly closure, it's come back, it's hit it, and it's acted like role reversal. We've seen a big spike up in the NASDAQ. If the NASDAQ's going to short though, probably needs to short around this zone. Am I confident in that call? I guess it's okay. It's a ratio. It's probably going to pay around 2-to-1. It's one of those levels where, you know, going against the trend is always difficult. We did see some switching where we got that higher high and we have a lower low. And I could see the market kind of finding some weakness through this supply and maybe knocking off a little bit of that NVIDIA excitement, coming back down, and then we'll find out what happens next. But yeah, very large move. NVIDIA absolutely going bonkers. And we need to really consider that stock at the moment to understand the next move for the US 100. I have not discounted the possibility of it going at least 14,100 before it truly cops it. And why? Well, it's got a lot to do with where the puts are in the markets. The middle of June puts are massive. They are the largest puts available for the rest of this year. So remember that June, the middle, where the rates are going to be made a decision again from the Fed, that is now the most hedged event of the year at this stage. And it will become important depending on where the market's going to be at that period. High yield bonds certainly did drop. That's a good sign for bears and obviously a good sign for trying to short this rally, which is something we're seeing on that NASDAQ potentially as well. And high yields made a new low. That's a good sign. That's definitely what you want to see if you're a bear. What about the 200-day moving average and the amount of S&P 500 stocks above it? Well, it's still hovering around. It just shows you breadth is really poor. This is being run by just a couple of stocks, not necessarily the whole market. I think NVIDIA really proves that. Same thing with the VIX. It spiked. Bond market spiked less. So overall, we still have a very high discrepancy between what the bond market believes is volatility and what the VIX is. But the VIX spiked out about 8.1% on the session. The dollar still very strong. Obviously, that usually correlates to weakness in the S&P 500. It's something we're seeing again. And consumer discretionary is still holding really well versus staples. So we're not seeing weakness here. I still think we're seeing overall rotation into this next sector. Potentially XLY is another sector if we believe the bulls are taking control. Utilities versus the S&P 500, a little bit of a pickup, though not strong enough yet to say that, okay, we're going defensive in this market. Let's now take a look at the options and unusual movements. There were quite a few of them, some interesting ones here. We saw Zoom getting some big moves with 134,000 puts going through. And we also have a whole bunch of other very large put percentages going through in a couple of positions. Take a look at that regional banking ETF KRE, got another 237,000 puts on it. Massive discrepancy there between the calls and the puts. Another one that was getting a lot of action into the earnings was Nvidia. Anyone that had a call on that's probably very, very happy right now. And we saw 1.18 times. And I would expect that to explode over the next 24 hours in the amount of options that are traded over the next session. It's going to be wild. It's probably going to be a bit of a gamble fest to guess the areas. And I think that's something that's big there. Let's scroll down and have a look, though. On the day, we saw 50% puts and 50% calls. That's interesting. Usually we've seen with big bear days, we've seen way more puts coming through. So we can see that there's a lot of people still wanting to buy the dip. Today's option value was actually less than the average option value going through over the recent periods. So it wasn't actually as active as you might think. Wouldn't be surprised at all, though, to see a bit of action on the next session, because I think it's going to be fairly volatile. If we go through, there were some large trades coming in on Nvidia. This one here, very happy, I'm sure they are with themselves. A 330, 616, call strike, big level here. They're going to be happy with themselves. And effectively, yeah, you can see a premium. It's a big position. So that's going to be one of those ones that maybe gets cashed in over the next 24 hours. Certainly a happy camper, I'm sure, whoever does that. Maybe they're getting a lobster this week for their special bonus. Let's move over to some of the other stocks that are moving. You can see here again, Nvidia topping the charts there in terms of options volume overall. I still expect that to be a massive day on Friday. Tesla still a behemoth overall in terms of percentages. And yeah, there's some interesting ones in here coming through. Unusual activity. We saw still Tesla finding a lot of unusual activity. I'd probably expect Nvidia to find a lot of 0DTE option expiration stuff going through in the next sessions. And yeah, that's probably going to make it up. But here are some of the most unusuals. A lot of Tesla calls, a lot of Tesla puts. Nothing too obscure, I would say, out of those, but take of it what you will. Let's move over now to some of the other things that we've been seeing. This is an interesting one. So after the meeting minutes, this is a refreshed target probabilities of the 14th of June. Economists read into that and they said, well, actually, we think a rate hike's coming. 35.4% are now bullish on a new rate hike coming through, whereas it was only like 10% like a week ago, and then now it's up here. These guys are switching their mind every second day. But anyway, that's why it's one of the most hedged events of the year. We're seeing a big change in the Fed and what their expectations are. Let's go over to the rest of the earnings for the week. This one was even bigger than the market thought. Not 7 or 8% move, more like 26% move. Wow. I wonder what it opens at. Will it actually be able to hold that high? We'll find out. There's going to be a massive gap in that area that people will try to trade. We do have some other fairly large names coming out, but obviously they are there with the expected options volumes. What did we see in terms of 5-day rotation? Some interesting stuff here. A lot of that big boom has kind of gone off, and you can see it's a lot more sideways action over the last 5 days now. The interesting thing is we have seen a little resurgence of utilities and healthcare in comparison. It's kind of like in the middle of the pack. And if we take a look at the last 24 hours in the market, you'll notice the best performing ones was energy, which tends to have a little spike at this period of time. With yields going up, energy is doing okay. Consumer discretionary, which held okay. And then we've got the pack of defensives. We're watching that like a hawk. I want to know what these defensives are doing right now, right here, to see whether the market is actually rotating into defensives before placing some kind of dump on the markets. This is going to be something we will be watching. And again, one of our most hated sectors of them recently, metals, underperformed. No surprises, copper got absolutely bashed. One of the better shorts this year. So just before we jump into the charts and we take a look at all of the key levels you should be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, if you know anything about this channel, you'd know that I really like Microsoft stock. And if you're from Australia or New Zealand, you will be able to take advantage of this special offer. But don't worry, if you're from anywhere around the world, there will be a bunch of special offers down below. For a limited time, if you fund with as little as $500, you'll get these additional bonuses. And if you fund with as much as 1,500 Australian dollars or New Zealand, I believe, within the first 7 days of deposit, you'll get an additional $50 US worth of Microsoft stock. Why do we like Tiger Brokers? Well, one of the big reasons that we're a fan of it is obviously some of the big tools that they allow you to use. One of those is heat maps and rotation throughout the markets. It's something we talk about a lot here. Over the last 24 hours, most things were red. However, there were some diamonds in the rough, And obviously after hours, it was all about NVIDIA, which we'll talk about very, very soon. But these are some of the features you can get along with your ability to actually pretty much customize your own trade windows. I love being able to do this, setting times, setting volumes, checking implied volatilities, checking the tape, all of these types of things are things that you want to do in markets. And I also love premium news. So if you're interested in the Tiger Brokers platform, some of these extra features that you can get, click on the links in the description down below, have a look at the special offers and check them out. All right, well, let's get into the charts. And before we look at NVIDIA and some of the other times that we've had similar situations such as these big squeeze events, and then we need to look at dollar index. And dollar index is still strong. It's coming into our zone. We've said since we got that weekly, it completely made us have to switch our trend because it was such a strong candle. It's a great one to take a look at. We've had it before. We had it again. It's pushing into this key zone. We're approaching big resistance though. 104 to 104.30 for the dollar index. That's going to be a critical zone we need to watch. Gold ended up shorting the heavy traded zone again. No new low, but I would be watching the new low. New low could expose 1920 for gold. This has been a fairly weak period for it, and I kind of expect it to continue to be relatively weak for the next couple of months, then hopefully improve. I'm not a gold massive bear. I do still think gold long-term goes up to $3,000, but we've got to realize manipulation is real in this market, and we basically are just looking at what we saw as a trend. Everyone got hyped on it. That's why obviously here I thought it might be a bit of a blow-off, and so far so good in terms of getting it back down here. I'm more neutral on it now at these prices, though I think we could still blow out down to the 1900s, 1920s. Natural gas did bounce off our little key zone first. That's a good sign. Let's have a look at the 2 hour here. That's a fairly nice bounce for natural gas. Nice kind of low, high, lower, low breach. That's good. It could pull back and do something like this, but in general, that's a fairly good level and a nice kind of movement off it. Not really too worried about it. It's probably like a 6 out of 10 kind of thing. Let's move over to oil. So we kind of warned against this thing going back through, even though I do want oil to short. I'm not naive enough to not see this kind of little location coming. We saw those series of higher lows, and unfortunately here we kind of went, well, it's probably not going to short. I'd like it to go higher first before potentially selling off. At this stage, I'm looking for it to move back up into these supplies. So probably still short-term bullish, I guess, on oil. I don't know if it's a great trade there, to be honest. Let's go over to XLE and have a look at the sector itself. It's improving. Again, no surprises. Oil's improving. It's going to improve. I kind of think something like this is quite possible, and we'll continue to move towards that being the big thing. Let's have a look at Tesla. Now, Tesla is strange. We've got the rejection wick. We have a big sell-off that occurred. Then, of course, we get this bullishness that comes in near the close, and then after hours, I'm sure it was up a little bit more. There's still a gap discrepancy, so that's 185.73. Could be an interesting point for day traders to take a look at. We know a lot of trades gone through here and here, so because we know those two levels or locations, it makes sense that we could get sellers around that 184.33 for Tesla. I'd be careful there. Let's draw a quick fib so that we can get that idea involved, and yeah, I think it's possible to even go a little bit higher, 61.8 maybe, and then seeing some sellers in there. If we do end up snapping a new high in the future, heavy trade zone, maybe short, I think that this presents probably more negatively than positively at this stage. We hit some of these levels we wanted, that 183, 184, we went a bit further, and I still think that Tesla's coming into a problematic time, but we will find out, and of course we keep our options open. Apple came down to our little blue line and couldn't break through. I'd expect it to probably find a little bit of a ramp, ideally 170, kind of 4, maybe then short. We know this trend line's a big deal. We've been following that now since March 28th of March 23, and it just keeps going peak, trough, high peak, high trough, high peak, high trough, etc. If it makes a higher peak and then a lower trough though, well, that could signify a change of trend. None yet. We did report on the island reversal, but we're looking now for either it to go up, come down, and then imagine if it gaps below. That'd be a big island reversal. I'm really looking at Apple very closely here. It can often be the canary that gets swing trades on board, and Apple is at my critical resistance. I've said it for a while. I believe that there are fund managers that most likely have cleared some positions. Just descale. That's all they're doing. They're descaling their positions from this point. Let's move over to Google. Not much here. It was down in the day. It went massive after hours thanks to NVIDIA. So it's floating around a critical level, similar to most of these stocks. Now, let's have a look at NVIDIA first. So NVIDIA has obviously been in this big weekly squeeze. Here's the squeeze of the lazy bear indicator. You can see those Keltners really getting on. And effectively, this is a stock that, I've had one go at kind of calling it, which was obviously around here. And we did see the sell. Obviously, that's a style of very quick trading, or at least risk management trading. This thing, I've said a few times, it could go very, very bullish. We know it's in a massive run. It is the premier AI stock, and everybody's talking about it. The problem we had, and why I said don't try to short this one over the rest, I'd rather short an Apple, honestly, than this, is because we still had so many puts outstanding on it. So many people were trying to short it. It was like the premier short that everyone was going for. The issue with NVIDIA has now been found. An earnings result that gets 26%. Let's just put that in context. Here's the close, 26%. That pushes us into almost 400 territory. It pushes us up basically $1 trillion of market cap. It's a massive move. It's not even just a joke. It's massive. That's going to put a huge weekly on. So let's just draw this candle to get an idea. This is not uncommon, by the way. This is something that can happen. You might say, well, not uncommon, $250 billion. Sure, it's a big scale, but this is what happens in these runs. They go into like crazy territory. People can't quite understand. You get these big kind of overreactions. What I'm looking for here is actually a huge dump, okay? So I'm not predicting this is the top. It could be 500. It could be 600. My guess is people around the world will now start making outlandish NVIDIA statements. $1,000 a share in 1 year, or $2,000 a share, or I don't know. They're going to say some wild numbers. Whenever you see and hear wild numbers, that's when I get cautious, guys. That's when I'm very, very cautious. I would generally consider what happens next. But if we open up, we hold these big numbers up here, we'll obviously have a massive gap to potentially fill in the future. I'm looking for a monster crunch. I'm talking if we open up, we get crunched 15% or something like that. What's that going to be? It's going to be a big profit taker. So we're looking for those signs. We are absolutely not guessing this thing can't keep going. Let me show you an example of what can happen. Here is Moderna. Now, Moderna might seem like a crap company to you right now, but there was a time back in 2021, I remember live streaming, we all talking about where everyone loved the Moderna, and this thing was getting wild. And you can see it had some mass volume through it, and it kept running, and it was doing outlandish numbers. It went to $400, $500 a stock. Now the thing trades at 131. It's a huge difference, obviously basically going back a considerable amount of its overall value. But this is what we're looking for. We're looking for this thing topping and getting crunched. I want to see a crunch. If I don't see a crunch, I can't be sure where the top is in. So we're looking for that blow off. We're obviously watching it. There are many cases of this throughout time. And we're going to draw some parallels in the future for this. But NVIDIA is going to be one that so many people are going to want to short. You're probably guessing at this level. But obviously, you might think it's an educated guess. It may work out. I don't know. But remember, the cost is going to be extreme to get into options or any protective tool. Let's move over to KRE. We obviously saw a lot of people putting in puts on this thing. I think KRE's done its initial run. For me, it would probably be a degradation at this point. I could keep going, but yeah, I've seen this type of thing before. This was a target. We'll probably stop covering it for now. But it was a really nice move, and obviously I wanted to bring it up again. US 10-year, that continues to be fairly strong, 3.75. We go over to the weekly here, one of the best indicators in the market, and you can see it's still riding up, and that's riding up because I don't think the market had priced in the idea that the Fed may hold for longer. Remember, when they pivot, when they stop raising rates, they tend to hold for 4 to 6 months. I still think the market has a discrepancy from this. Who will hold their nerve? That's the question. The Fed, or will the market crack it at the Fed? The DAX, look at this. When you don't have tech in the market right now, it looks disgusting. This thing just got smashed. Like the DAX here, huge weekly closure if it gets down here. Massive engulf off all-time highs. That's probably been the premier short, actually, when you really think about it. Other than metals and energy recently, this is a a fairly large short. I mean, as an index, this thing is down now almost 3% over the last couple of days. The ASX 200, no surprises. Copper down, smashing into the Australian market. This one, definitely, I have been incredibly bearish on. I have explained my reasoning pretty strongly. Today's close is going to look very significant. If we get underneath 71.40, there might be a little bit more of a sell-off to occur. And it just shows you there are cracks forming in the old economy stocks, not necessarily in the tech, because the tech is just getting wild. But this is the type of thing that happens. We get blow-offs, we get massive unrealistic moves, and then we come into the ASX, and you can see here, the Australian commodities market is starting to get sick. Let's move over to US 2000, totally different chart to this is the futures, so it's totally different chart to, of course, everything else. Looks nasty on the weekly. Let's take a look at the daily. And you can see here again, the rejections coming down, new low formed, kind of points towards rallies potentially being met by sell demand. So if we get like a rally somewhere up in this kind of area, what would that be? It's around that price of $17.95. You're probably going to look for the concept of maybe shorts getting through there. But again, what has this done? If this ends up making a new low, it trapped people into buys here. It made a new high, making people think it's a breakout, completely rejected it. It's why we were very cautious on the daily close. We needed, the close is the key. That is not the close you want to see if you're a buyer on this particular market. So the tale of two markets continues here. US 100, we already reported this. We were on a TD like 13 or something, I think. We've sold off back to the weekly high. Breaks now underneath that will be significant, letting us kind of flow back down to 13,220. So yeah, what happens here is going to be very interesting next 24 hours. I'm keen to watch NVIDIA for sure and what happens there. S&P 500, we've talked about whether this is some kind of Wyckoff, a SI, a buying climax, a UT, a UTAD. It looks literally like a distribution scenario. We didn't get a new low yet, so we're not there. We did fill some gaps, so we can delete that one. We've now got new gaps that we have to open up. So we have to open, there's a gap here. There's obviously a gap here. Markets can quite easily do something like this. And then, yeah, we'll see what happens next. Let's have a look at this scenario. So this is one of the distribution schematics. So if we get kind of like a very weak rally here, which so far we've seen a rally into previous supply, which we'll look at in a second, then we sell off, then we start to consolidate near that 40-60 low. Ooh, if we get a breakout, then it's most likely a Wyckoff. So we have to be aware that the market is setting up with a very real distribution case. We're not sure of it yet, but we're certainly putting the pieces of the puzzle together. Let's move over here to the US 500, still in an uptrend overall on higher timeframes. Didn't swing this low, which is something I was talking about in the private community potentially happening. Did hold the 41.26 most traded range to 4110, which is what we said in the last video. Now we need to see what happens next. 41.57, an interesting alert level. I'd expect from there probably to rotate back up to 41.70, 41.80, then maybe sell off. If that does happen, heavily traded zone could be bought back again, and we actually could still move higher, potentially breaking our Wyckoff concept. If the markets just kind of fail here though, and they keep going down, yeah, that's starting to play really Wyckoffy. So at that point, swing traders can start to say, whoa, 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 whoa. What's happening here? I'm suddenly very interested in this market again. Let's move over to crypto. Is it showing us the keys? Well, crypto was weak over the last 24 hours. It closed a new low daily. Look at that. The alert zone's through. Some follow-on action after that already. We're looking now for crypto down to 24,000. If Bitcoin is showing us the head and shoulders is in, then we probably are looking for weakness in crypto. Therefore, maybe some weakness coming through all the markets. Has it been leading? Kind of. It has actually. It's been leading a little bit better. So the market's being propped by puts everywhere, whereas the crypto market's just kind of been flowing. And at this stage, big daily close and obviously significant move to the downside here, and maybe it'll continue to go. Let's have a look at the news for the week ahead. We'll quickly just scroll through here. I'll just bring that up. Basically, we've seen now, of course, the meeting minutes. They wasn't really too much to go through there. We didn't really get that much information, but we do know they're sticking to the plan of we're going to keep rates higher for longer. That's at least what they're claiming. Over the next 24 hours, we have unemployment claims and the prelim GDP number. Then we have core PCE price index, which we know the Fed does look at 8:30 a.m. May 26th. Plenty of volatility, though, I think, just in the stock market itself. If you enjoyed today's video, then definitely come and check out some of the other things we do. Follow us on Twitter, get some free trading cheat sheets, anything else you might be interested in, you can check it out there. And of course, a big thank you and shout out to the sponsor of today's video, which is Tiger Brokers. If you want to check out their special offers, the links are all down below and you can have a look at maybe whether it's right for you. Thank you and subscribe, smash that like button. See you in the next one.